AICPA Town Hall, a high-impact news broadcast to help you navigate the most pressing issues facing the profession. Get timely and critical information, real-time interpretation, and analysis. Learn strategies, best practices, and capabilities to drive long-term success for your clients and organization. Thursdays at 3 p.m. Eastern Time.
Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of your hosts, and we've got another Power Hour in store for you. There's a lot going on in Washington, D.C., and we have some very important tax updates. So you just heard with that opening there what the Town Hall is all about. What I'd like to do is thank all of you for helping us get this Accounting Today Award for 2022. Top new products. It was actually the town hall has been in place for 2 years, but we greatly appreciate the recognition from Dan Hood and Accounting Today, and thanks to our town hall community for making this such a important hour every other week with the profession. So here's the agenda for today. We're going to kick things off talking about, in particular, what's going on with the IRS in DC. And then we're going to get into some, more detailed tax updates, talk a little bit about K2 and K3 preparation. We're also going to do a little bit of a deep dive related to crypto guidance and tax reporting. And we'll always do our regular kind of, technical updates with Lisa Simpson. So here's the lineup. I'll introduce them as they join the show. Kicking things off with me now is going to be Mark Peterson, who you all know, who leads the advocacy team in Washington, D.C. So welcome, Mark. We're gonna start off talking about a little bit of progress, but with that progress, some frustrations.
Yeah, no, absolutely, Eric. Thank you. So we have seen a little progress. I got 2 bucks to talk about, as Eric pointed out. Really, kind of our efforts related to IRS service and the fact that they've got to do better. We have seen some progress. I'm going to get into that, and then obviously we're probably already lit up in comments about guidance on K2 and K3. There is a little movement there, but the punchline here, Eric, is that it isn't enough, and we know that, and we're going to need to continue to push. And we have a plan to do that, but we've also had a lot of activity since the last time we chatted on a town hall.
Well, I mean, what you've got here, a lot of news, Mark, about the suspension around these IRS notices. We actually have a link here about the notices that were suspended. And I know we're gonna, what else? What else? So we've made this progress. What else do we need to do?
And we're going to give the IRS credit. Some of the automatic notices were suspended. So we very much appreciate that, but there's more work to do. More can be suspended. More should be suspended. We've also had several other recommendations, which the town hall community's heard before, that could impact right now, not solve the problem, but impact service right now for this tax season, related to reconciling account holds with the ability to get abatement, reasonable cause, and safe harbor. Related to underpayments. And then there's a new one, and there's actually a little breaking news related to this about really it's IRS staffing. It's putting in place a surge team, a temporary surge team that can really focus on correspondence. We've heard as the first surge team was announced that they would be able to maybe manage 600,000 pieces of correspondence, which is helpful, but we're about 24 million behind.
Wow.
So even with that, there's a lot of work to do. Again, we're given credit for trying, but we've got a little more news on the potential for some relief related to those correspondence as I work through this update.
So Mark, just a little bit, we got some questions coming in. So with these 8 notices that were suspended, we need more guidance, more clarification around them, and the AICPA team's working on that. Some questions coming in related to, when are we going to get maybe some more information on some of these clarifications?
So as quickly as possible. The team's been working through this. We're going to be able to post things. We'll do it through the not only through the tax division, but also through the town hall community. in order to give you as much clarification as we can. But I will tell you, for each of the notifications, we have to go back to the IRS to understand exactly what the guidance that goes along with them is. So we appreciate the suspension of the notices, but it doesn't always clarify the issue. And also different practitioners interpret these in different ways. And sometimes we have to try and get guidance to help clarify that.
Okay, thanks. And there are things that the AICPA feels that legally the IRS can still take additional actions right now.
Absolutely. So, there's two issues that come up quite a bit. And one of them is regulators, the IRS, will say we don't have the statutory authority to do something. Mm-hmm. We actually think they do have the statutory ability to suspend some of these notices and to take action in some of these other relief areas. So we believe they can do it. And most importantly, it will provide some relief now.
Well, Mark, I know there's a lot happening, and it's breaking news here that we're bringing on what happened today at this Senate Finance Committee hearing.
So actually, this is really important. The timing of this hearing. Almost traditionally, Congress has done kind of a post-tax season hearing in the House and in the Senate to kind of see how it went. Because there has been so much pressure, because there has been so much noise that's being made, whether from the Tax Preparer Coalition that we belong to, the town hall community, the Tax Executive Committee, the state societies. This was actually an unusual, in its timing, bipartisan effort to focus on service at the IRS. That was today. Aaron Collins, who's the tax advocate at the IRS, testified. GAO was there. GAO has a statutory responsibility of oversight over the IRS and does an annual study. And then, our own Jan Lewis, who's the chair of the Tax Executive Committee, testified today, absolutely focused on the service issues. Now, I will tell you that, and this isn't, unusual, there was some political back and forth related to, well, isn't this all about funding? And, if the IRS hadn't been cut, would service be the way it is? And so there was some of that. But really, what Jan did, which was phenomenal, and she was a great representative for us, was focus like a laser on the things that could happen now in order to alleviate some of the pressure on practitioners and taxpayers. And even the next issue we're going to get into on K2s and K3s that she brought up. One of the other things that came out of this is announced during the hearing was a kind of basically a second surge team being created in order to try and pick up more correspondence. What happened today was very important, and I think it's going to really help the effectiveness of our efforts, because we're going to see some good press coming out of it about the focus on service in the IRS. We're also going to see more congressional intention, which has been the goal of everything that we've done, is to make sure that Congress is pushing on the IRS to do what they can do now to provide some relief. And with that, Eric, I think, again, I'm sure the comments have a lot of questions on K2 and K3. So if Lisa and Amy could join us, we can kind of transition and talk to about that a little bit, at least tell you what we know. And to tee up Amy for that, which is the next slide, we saw this coming. So, the tax division saw this coming. There was, a lot of engagement that happened. We have seen some activity, and we're going to do the best we can to talk you through it. At the end, I'm going to tell you, though, there's more work to do. Amy?
Thank you, Mark. And yes, Mark's absolutely correct. Today, Jan Lewis, before Congress, testified on K2, K3 concerns. But to start from the top of this slide, we just kind of provided some resources of how we saw this coming. We saw that in summer of 2020, IRS had this campaign going, and it was called the K2, K3 Foreign Partnership Reporting Campaign. And we tried to engage with them, about what this reporting would include. We had a joint webcast where we kind of walked through some of their filing. But, at the time, we were still not exactly sure what was going to show up on these forms. And then right after that webcast in September of 2020, we submitted an AICPA comment letter. It was 16 pages long. So if you're interested, all of our recommendations, we walked through every single section of these new forms, and we commented about how they should be changed. And after that, in 2021, we had 2 meetings with the IRS where we continued to push for the changes we want, which was mostly delaying the filing until 2023 and also minimizing the amount of reporting that would be required, minimizing the amount of partners that would have to file this information filing, and minimize all of that. And we realized by November of 2021 that IRS was not going to pull back on this. They were full force. They were expecting this filing to go through tax year 2021. So then January 18th, I'm sure everyone on this webcast knows there were updated instructions to the K2, K3 filing right in the beginning of filing season. And we all initially assumed the schedules were only required if a partnership or S Corp had foreign operations or foreign equity holders. But the January 18th post-release instruction said that entities with no foreign activities or foreign partners might still need to complete the K2, K3 if a partner or shareholder claims a foreign tax credit and needs information from the entity to complete Form 1116. And then this brings us to yesterday. We're mid-tax filing season, and the IRS puts out a new FAQ. And as we are finalizing, we were already getting ready. AICP was already getting ready with our members, our task force members, to submit comments. Yesterday, they came out with the new FAQs, FAQ number 15, which is the next slide. Maybe quickly go to, yes, FAQ number 15. So they released this yesterday, and it does provide some relief for tax year 2021. If you want to read the slide, it basically specifies all the specific entities that would be offered relief for tax year 2021. Partnerships and S Corps that qualify for these exceptions do not need to file Schedule K2, K3 this year, but you will need to file next year, if there's no delay. And while these new FAQs offer relief to many pass-through entities that haven't had foreign activity, and this is a vast improvement over prior guidance. We know it's not time to put down our task force's pencils yet because we need to keep pushing for more relief and more clarity of the rules.
So Amy, let me ask you a question, because I was the bearer of the bad news 2 weeks ago when we talked about the fact that the forms had broad applicability based on the guidance to that point, that you couldn't e-file them until March and June. So on the surface, this FAQ looks pretty good, and it looks like it's going to scope out a lot of filers for this year, as you pointed out. But there seems to be some indication that it's not the golden get out of filing free card that we were all looking for. So can you go into that just a little bit?
Yes, absolutely. So Lisa, you're correct. Even with the latest FAQs, and you're right, it does offer relief to a lot of small partnerships and a lot of practitioners that are, smaller firms with smaller partnership clients. However, even with the latest FAQs, the IRS has not offered relief to those partnerships who have no knowledge that their direct or indirect partners have Form 1116 filing requirements and no other items of international tax relevance. So there's still a lot of areas for clarity, and we will be officially submitting AICPA comments. And we believe that the right answer here is a full delay of K2, K3 filing this year until 2023 and broad penalty relief for K2, K3 in tax year 2021.
And we're just to amplify that, we're taking those comments. We're getting the message out about the confusion. We appreciate the attempt, but there are enough questions here that we need more clarity. And without clarity, we need delay and or penalty relief. And so the committee is going to be putting out communications. We're going to be gearing up our machine in order to make sure that, Jan teed it up nicely at the hearing, to make sure that Congress understands the complexity here and the challenge for practitioners. So we have work to do. We know that this is not satisfactory for everybody, and we've got more work to do, and we're going to do it.
Absolutely. And I think one of the biggest issues is that, and I know Jan testified about this today, it's that IRS is insisting on implementing this reporting when the full e-file capability is not in place yet, and they keep putting out additional instruction changes this week, mid-filing season. And so given all of that, and with processing backlogs that the IRS already has, AICPA and our members, we just really feel full delay and broad penalty relief is really necessary.
But at this point in time, based on what we know right now at 3:15 on February 17th, it looks like a lot of if you've got a closely held pass-through entity and you know that there's no 1116 to deal with or whatever, for most of our small entities and the CPAs who are helping them, this is a welcome relief for 2021 filing season, but they need to be thinking about their systems and processes for 2022.
Yes.
Okay, that's great.
And so again, communications will continue to come out, and we'll make sure that the town hall community gets that. We're going to include Jan's testimony from today again, so everybody has that. And there probably is going to be some level of call to action that we're going to be looking for as well. Again, we're keeping the heat on. It was the hearing this week. We're going to definitely be working social media and the press, and Capitol Hill, in order to, and the great work that the coalition is doing to see that we can get as much clarity and relief as possible.
And Mark, if you just think about things here, so we the town hall community, the coalition, I think enabled the AICPA to be part of today's hearing. You were at the hearing. You didn't know that this announcement was going to come out yesterday. Well, you then worked it into Jan Lewis's testimony. Jan Lewis has been on the town hall here, so just a lot of things happening real time. And Lisa, you just did a great job of kind of distilling it down for all the firms listening. So we've got some resources here, Amy.
Yes, so we actually have a new resource hub for K2, K3, and you can go to this link, and I think we have a few tools and just FAQs that really list out the guidance, what we know right now, and what you can use for filing. And one other thing is there's a link in the prior slide. If you have the slides, there's an IRS alert page that they put up, and all of the alerts for filing season 2022 are on the IRS alert page. And as you all know, there was an alert on the 14th, 15th, and 16th. So it's every day.
And this will continue to be updated as the committee sifts through it.
Lisa, anything you want to add related to your kind of firm tool?
I'm getting lots of questions from our town hall attendees, but one of them was around, so to give insight into the complexity of the filing, one of them was a pass-through entity that was getting foreign income from mutual funds or investment funds. How are people treating that in terms of sourcing the country on these K2, K3 filings?
Yeah, so our task force, we've looked into this, and we've heard that coding this as a RIC, a regulated investment company, works.
Okay, that's great insight. And I'm sure we've got 1,000 other questions with more details, but good news so far, but we're not done yet. That's basically the summary, right?
Absolutely.
Perfect. Thank you, Amy.
Well, we're going to continue, Mark. We're going to continue on here. We're going to move into we actually have one additional article to highlight here. So who wants to talk about this before we move into crypto?
It's just a great Journal of Accountancy article. Y'all know I love to plug the J of A. This one is a good one that just summarizes the relief that we got this week.
Well, now I'm going to pivot. Amy's going to stay with us. Amy, you've been on previous town halls. Amy's one of the key leaders in the tax area there at the AICPA, and she's also doing a lot of work in the crypto areas. So Mark and Lisa, you'll be joining back with us shortly. Thanks for that opening. And then with that, we'd like to, and Amy, I'll have you introduce Kirk Phillips. So Kirk, we've got a practitioner, very familiar with the crypto space. So Amy.
Thank you, Eric. So I'm really glad to be joined here today with Kirk. And Kirk is actually a member of our AICPA virtual currency tax task force. We have so many task forces, but we're really trying to monitor and stay ahead of all these issues. And we're going to cover crypto because this topic impacts nearly every taxpayer and preparer. And why is that? Because it's at the top of the Form 1040. So we're going to cover how do we answer this question? Because as you've all seen every year, this question on the Form 1040 has been modified just a little bit, and the instructions have been modified as well. So the new 2021 Form 1040 question reads right here on this slide: at any time during 2021, did you receive, sell, exchange, or otherwise dispose of any financial interest in any virtual currency? And last year, where it says dispose of. Now it used to say acquire. So they keep changing the words and the instructions are different as well. How do we answer this question? Well, we have to look to the IRS FAQs. Those are online, and also the Form 1040 instructions. Now, the online FAQs were updated this past March, and there was a very important update, and it says if your only transactions involve virtual currency, involving virtual currency were purchases of virtual currency with real currency, you are not required to answer yes to the Form 1040 question. So what's an example of that? It would be if, say you bought Bitcoin with $100 US, you're actually not required to, it's not taxable, and you don't have to answer yes to that question. And that is a huge area of clarity for many taxpayers. Also, the 2021 instructions for Form 1040 say, regardless of the label applied, if a particular asset has the characteristics of virtual currency, it will be treated as virtual currency for federal income tax purposes. Now, we're not that happy with that piece of instruction because what does characteristics of virtual currency even mean? But that's just what we have. That's what these in instructions this year. Also, the instructions say a transaction involving virtual currency does not include the holding of virtual currency in a wallet or account, or the transfer of virtual currency from one wallet or account you own or control to another that you own and control. And that was a big question for a lot of taxpayers. You know, they hold virtual currency in an account and they decide, oh, I'm going to change it to a different wallet. Is there reporting? Does that have reporting implications? So that piece of instruction was very helpful as well. And now with that, I'm going to turn it over to Kirk to provide some practical practitioner advice on basis tracking.
Yes, thanks for having me today. I really appreciate that. So just wanted to tack on something too about this question, because like you said, when you get into what are the characteristics of virtual currency, like if somebody's really in crypto, then they know they're in crypto, but you could have a situation when I'm talking about that is the regular crypto assets you'll see on CoinMarketCap, et cetera, right? Bitcoin, Ether, and so on. So you would know that. But if you have somebody who's not into crypto, but yet maybe they're into something else, and that something else is the characteristics of virtual currency, then they could be left not really knowing how to answer. They might, in just passing, think, oh, it's a no, and not really dive deep enough. So that could be a pitfall. The other thing is answering yes may or may not equate to having a reporting requirement, such as on 8949. That's the thing. So you can answer yes, and some, taxpayers, tax practitioners concerned that answering yes, of course, first thing, you're going to go to look, IRS may look, well, where's the 8949? You may not need that because you may have not had any sales, even though you need to answer yes. You could have received it for income and so on. So a couple little nuances there to pay attention to. And of course, every taxpayer has to answer that question, whether you have it or not. So it affects all taxpayers, all the reporting aside. So anyway, with that being said, my intention now is to give some golden nuggets here about best practices from a firm point of view, so you can add massive value to your clients and potential clients without really increasing any of your knowledge around cryptocurrency. So how do we do that? Well, first, let's just take a look and examine what are the ways that you could interact with and actually deliver these services to your crypto clients, because I'm sure there's a whole range of folks here on the call, all the way from maybe already specializing into this area, or you're certainly, I'm sure, getting lots of inquiries on the topic, and that's only going to increase. So when you start to take that on, how are you going to manage it? Well, first of all, this can't be done whether by a tax practitioner or a taxpayer unless you have software. You got to have software. It's basically impossible. So there's three main ways that you can deliver these services to clients, and that is with a practitioner-owned software portal. And that's not I'm not talking about something created from scratch by a firm that's proprietary. Okay, what I mean by that is basically a practitioner portal that's designed to have both the practitioner and the client have a user interface, bidirectionally, and be able to have access to the same information. So that would allow you as a practitioner, you set up an account, you send an invite, let's say, to the client accepts the invite, they can upload their information and so on. That obviously adds security to the equation, because then the tax practitioner is not handling that raw data directly. It's still on the client end. So that's one way. Number two is the the data download and the data dump by the client. So basically the client gathers all the information together into a folder and makes, just gathers it together and makes it available for the practitioner. So it's a client who says, I don't want to deal with this at all. I don't know how to deal with it. And so, but the one commonality that I will say is when it comes to exchanges and wallets, albeit decentralized or centralized, is the CSV download. Although you'd be surprised, there are still some cases where you can't even get a CSV download. You got to take screenshots. So nonetheless, that client gathers it all together in a file. And this is where you would probably use your existing share file or secured file sharing tools that you already have. And then that client's going to share that with you. And then you're going to do everything from scratch. So that's like the second possibility. And then, of course, you've got what we call client-owned software, which is basically the client is coming to you and they've already deployed their own software. Maybe they've had it for years, either 1 year or 2 years or whatever the case is, but they come to you, they've already put all their transactions into the software and they may have already used it themselves or hired another practitioner previously to help them with that software. So they're coming to you with the software that they've already deployed. Now, of course, everybody's going to want to have an efficient, streamlined, systematic process of dealing with crypto clients. And ideally, you'd say, hey, yeah, just give me a really good software platform and let's just use that one. But like I said, maybe half the time you're going to have clients who show up and they're already using one. So what that means is then you have to be proficient to some degree in a whole range of these different softwares. Okay. And then there's actually really a fourth, and that's simply that the client provides you with the 8949. So that means you could actually have any CPA knows how to deal with an 8949. So if they actually hand that to you, anybody could take it from there. They don't even need to have any knowledge of cryptocurrency or crypto assets. Of course, the issue is, was that 8949 done correctly? The client's giving it to you, but that's another story. So that's one thing there you've got to consider if you're just getting into this. I think it was a crypto.com article I saw just maybe a few weeks ago. And it mentioned that I'm not sure actually how many users there are worldwide, but let's just say it's 100 million right now. But the effect of the article was that by the end of 2022, so in a 1 year period of time, there was going to be a 1 billion user base that had exposure to crypto assets in the world. That's a huge leap. I didn't even think I was reading that correctly when I saw it. That's a huge leap. So if you're still seeing moderate knocks on the door about this topic, every practitioner is going to have more and more inquiries about this. So anyway, with that being said, move on. So how do you do due diligence with a client so that the client's coming to you? How can you add value to them? And then this is, without even really having any crypto knowledge, just using your CPA due diligence skills. Okay. So they come to you. What you want to do is have an inquiry with them to really understand how far back in time do they go. So what's your starting point? Like, what year did you start in crypto? What was your first purchase or however you got it? What was the starting point? Okay, and so you would figure out what year that is. Did you have anything that was reportable in that year or subsequent years? Yes or no? Okay, well, was it reported? Yes or no? And these might seem like obvious questions, but you'll find out that you really got to drill down to that level of detail. And then you could ask them, is it accurate and complete? Even though they filed it. Because what you'll find out is the answer might be something like, oh, well, yeah, I used somebody last year and, I don't really think they knew what they were doing. And I'm not actually really that confident that it was done correctly. So again, another opportunity for you, not only to provide the current year service, but in the process of doing that, you could look at all the years and see if there's any, gaps or holes in their compliance landscape. Then another place you can add value with your due diligence questions is the checkbox that Amy mentioned. Of course, in 2019, that checkbox showed up on Schedule 1. And the conundrum there is that not every taxpayer files Schedule 1. You otherwise have to have other income or whatever else might trigger that's listed on that form to file it. So if you didn't have anything that was on Schedule 1, and you had crypto, the only thing that would trigger filing it is to answer yes. But many practitioners weren't even aware of that. So a lot of folks either self-filed and didn't get it, or they may have paid a practitioner to file the return and that box wasn't checked when it should have been. So you should just go back and verify if they should have filed it, help them verify, was that box checked? Yes, because that's a serious question. It's an attest question under the penalty of perjury. That's a serious consideration that needs to be answered correctly, separate and aside from actually the compliance reporting if you have that. So That is a real quick summary on best practices there. I can tell you that it's like with the proliferation that's about to unfold here. Like I said, if the number of users was in that if that's correct, you got to continue to educate yourself. So whether you're looking to have a practice area that specializes in this, or you're just going to make sure that you can cater and accommodate your existing taxpayers, in any case, you got to educate yourselves. If it's a practice area, I mean, if you're going to look to really specialize in the area, you're going to have more than one champion in that area in your firm, power users, if you will, et cetera. Because I can tell you that when you have prospective clients calling you, what they can tell, they can read through the lines and they can tell how experienced that person is. So in other words, you're holding yourself out there as this expert. If you say you can do crypto taxes, you're holding yourself out there as an expert. But when the potential clients talk to you, they know what your level of experience is. They're gauging it consciously and unconsciously. So, a lot of times when that conversation doesn't go well and that prospective crypto client, they realize that the practitioner is not well educated or not well versed, it doesn't resonate well with them, and they will likely go seek somebody else. Because we've had these calls all the time. People always call talking about how they're looking to make some change because they don't think the current provider understands this. And typically the people that are in it, they're really super passionate about it. It's a substantial part of their assets, and they want to know that they can talk to somebody who can talk the talk, so to speak. So that's another important thing there.
So I've got a bunch of good questions here, Amy and Kirk. That was just great, summary of some of the basics. And I like how you kicked this off, Kirk. So some of the basic ways you can begin to get your arms around this, because this is becoming mainstream in many ways. I mean, you've got conservative financial advisors who are saying you can put 1% to 2%, not 50%, but 1% to 2% of your portfolio in crypto. So it just is questions just about if someone does have crypto in IRA or 401k, do they have to, how do they answer that question? And I'll give you one more, and then I've got a couple others. But then, what do you think about the 1099-Bs coming from Robinhood and Coinbase? So maybe grab those two questions.
Okay,
first.
that's a great. Well, that's interesting about the IRA. I actually can't say that I'm actually not sure. We haven't. That the instructions don't seem to address that specifically anywhere. And even though actually in the task force, when this question first came out, we had like 19 comments on this question. So seems like a simple question, but there's more to it than that. I would say if the other elements of the instructions would indicate to do it, regardless of whether it's in a deferred account or otherwise, a regular account, let's say, regular holdings, should probably answer yes. I don't think it would be beneficial in general to try to like dance around. If there is a yes, to try to dance around it in a way to the answer no, if it's really a yes. So, but the other question regarding the Robinhoods and so on, I actually think that reporting could lead to actually more confusion and more work and so on with a practitioner for various reasons. I might not have time to go into the details as to why, but because then you have an issue where if a 1099 got issued from one provider, the software basically, for the most part, commingles all the transactions you have from all sources, whether you had 23 sources or 7 sources or whatever. It commingles it as if it was in one wallet, as if it was in one account. So then you've got to try to perhaps pull out a 1099-B if it's reporting that, because you may add that as an attachment, and you may have to strip that out of the rest of the software, and it's not really designed to do that. So I could just see where there could be a lot of extra confusion and work to try to get the reporting done correctly.
And Kirk, on that, what they are asking, you did a nice job of the 3 different paths, which we all know the first path so well. You leverage a professional tool built for CPAs that allows you kind of support your client, and you got to use technology. This is, you don't want people just giving you all these documents. Even the path 2 there was just kind of like, okay, give me a huge file of documents, which gets complex, or the path 3 where the client's doing it. So you just right now at this stage, you need some software to kind of support you. And we've got another webinar coming up that's going to do a deep dive into that category 1 type of software. Here's another question, and then I know we've got more slides here. I mean, you can drive. What are we recommending, the AICPA recommending, related if they did not, amend regarding amending of returns if they were not, properly checked in previous years, but should have been?
That's a great question. Amy, you want to chime in on that one?
If they were not properly checked, I mean, to amend the return and.
Yeah, we're talking about basically, yeah, like I said in my 2019 scenario. Yeah, I mean, go ahead.
I would say we would just recommend that the return should be filed correctly. So you would want to amend that return. And like Kirk had mentioned earlier, many people fear that answering yes on that question means that there's a taxable aspect to the return, but that's not necessarily the case. So, if you feel that question should have been yes, you should answer yes and do your best to provide all the additional information. But it doesn't mean that there was a taxable event.
So one last question, then if you want to, just a clarification. If you just bought crypto, does that mean it's a yes? Because you gave that example of just buying a currency.
If you purchased that crypto with currency and that's all you did, and it's still sitting on some wallet and you didn't do anything else with it after you purchased it with a currency, no, you can answer no.
Yeah, just to be clear on that, it's purchased with virtual currency the way they're stating it with real currency, which is, let's say, Bitcoin with US dollars. To be clear, because if you purchased Bitcoin with ETH,
with another coin, that is reportable.
Even though the purchase was also a sale. So that would be a sale.
Yes.
You have to answer yes.
All right. So let's.
So maybe we got to keep, the thing is we do have our webinars on this topic, and this is a town hall, and this was asked by the town hall. And so thanks for kind of this info so far. I'll let you continue.
Yeah. And then Kirk, do you want to quickly cover that latest case? Because another thing we're monitoring closely is court cases that are setting precedents on crypto tax.
Yeah, sure. I'm sure everybody here has probably seen at least one article or heard some buzz about this. That was kind of the frenzy of the past week, is when the Jarrett crypto staking case that came out, and the big news was that the IRS is going to issue a refund, which is what the Jarretts were actually asking for, and so on. So, what I noticed, that there was a frenzy of articles and headlines that came out in the news from all the way from tax-free crypto staking, making it seem like almost, but I could see how taxpayers might be like, oh, tax-free, like it's always tax-free and stuff like that, perhaps. So I think it's going to create a lot of confusion. But then, of course, later ones have come out to the tune of, well, crypto tax pros throw cold water on crypto staking excitement. So you got that. So really, you don't really have much here at all, because it's just a refund in the case. There's no court decision. There's no court ruling. There's no precedent. It happened even in district court. It wasn't even in U.S. tax court. So if there was any type of a court ruling, it would have been limited to whatever that area is. So there's really nothing of substance here to hang any hat on.
Right. So many people thought it was setting a precedent, and what we're seeing is no, this is not necessarily the case. Yeah. And one of the things that we're working on in our task force is we're drafting a new letter, and we're going to be talking about the issues between proof of work versus proof of stake. And that's kind of the issue right now as a result of that case. We're also going to be covering additional just vague areas of the Form 1040 virtual currency question that I mentioned earlier, like definition of characteristic. What are the characteristics of virtual currency? And of course, taxation of NFTs. And so that's our plan. In terms of advocacy, we're going to ask the IRS for more guidance, because there are really areas that still need more authoritative guidance. And then another area I wanted to cover is just the potential federal and state tax legislation surrounding cryptocurrency, because every day you'll see a new bill, whether it be in Congress or your own home state, regarding taxing of virtual currency. And the reason why it's so popular is because, we're still in a pandemic, but as we're nearing post-pandemic, the governments are really seeing virtual currency tax as a way, a good area for revenue. And so one of the bills in Congress that made a lot of headlines was crypto basis reporting. And the AICPA is still advocating that, Congress not require cost basis reporting at this time. And we ask for a delay because there's just so many complexities. Treasury has not put out proper guidance on how to report tax basis on virtual currency assets. And we think they should delay that until the proper guidance is available for how basis reporting is done. And also another big one, there is a bill out right now, HR 6582. It's the Virtual Currency Tax Fairness Act of 2022. And that is a bill proposing a need for de minimis election. So AICPA supports that. And the bill says that Congress should allow a de minimis exclusion for virtual currency, similar to the exclusion allowed for foreign currency transactions. So tracking small amounts of gain or loss, like for example, if you use, because now you can use your Bitcoin or your other coins to buy a coffee at Starbucks, or a small item here or there. Tracking the gain or losses on those small transactions of low value really creates a situation where administrative costs outweigh any possible tax on the immaterial transactions. So that's a bill that's proposed. I think the de minimis amount is $200, and we're really supportive of that.
Yeah, if I could just add two quick, really important takeaways I forgot to add earlier. So number one, I was talking about like the due diligence for a client and so forth. Another important one there is to understand what's the cost basis that the client used, if any, if they've already came to you and they've already reported their crypto, the crypto transactions previously. So the cost basis, obviously, everything you do be reasonable and consistent, right? So that's super critical with cost basis, because everything else considered, a different cost basis could dramatically change the outcome of what your crypto tax calculations look like. So one of the due diligence questions is, do you know what your cost basis is, what you used the first time? Because basically whatever you choose, you've got to stick with that for consistency purposes. And you'd be surprised, some clients actually may not know, because they hired somebody, the other person did it. They don't know what their cost basis is. So you need to find out if they know what it is, and then you need to make sure, was that used consistently every year up until this year? And you want to follow suit and use that one again. So super important to get flat on what cost basis is with your client. And another one is just back on the staking thing. So talking about how you can add value to clients, because they're going to be coming to you and there's going to be all kinds of confusion with taxpayers. I call it the telephone game, where you whisper into a line of people, and then the person on the other end says what the thing was that got passed along, and you find out dramatically different from where it started, right? That's how this chatter, I think, about crypto taxes comes out. But anyway, this is going to happen with staking. So the staking in this case is related to proof of stake type staking. But what my point here is that the word staking is a very, very broad term that's used in many situations. So there's lots of different kinds of staking. So taxpayers could once again confuse, thinking when they hear tax-free staking, that means anywhere where they use the word stake, it's all tax-free. And I know that's not the case what we're talking about. I'm just saying taxpayers are going to come, I think, with another extra level of confusion around this, because there's many, many definitions of staking, and you got to know what the context is when people are talking about staking.
Thank you, Kirk. And then I think our next slide is, we really wanted to show the attendees, because, everyone's been asking, our number one question is like, what are NFTs? What is the value behind an NFT? Explain to us an NFT. And Kirk, I think this is a really good example to share with the audience.
Sure. Best thing to do is let's take a real quick trip back to economics. So, because that's the easiest way to understand this term, because it is a clunky term, right? So when we think about the attributes of money, we've got the attributes and the properties of money are, it's fungible, portable, divisible, and durable. All right. So without getting into the other definitions, you can see that fungible was the first one I mentioned. So that means that US dollars, for example, like the paper bills, are all fungible. Every dollar bill is considered the same as every other dollar, but when you get it, it's a clean slate. And I get that they have serial numbers and so on and so on. So the same thing applies to all Bitcoin, all Ether, Sol on the Solana network, Atoms on the Cosmos network. You name the blockchain in the coin. Basically, all the tokens there are considered to be fungible. So therefore, the opposite of that is when you have something like a artwork, what I call a digital artwork NFT, that's basically it. It could be a one of a kind. So therefore, it's a unique token, and therefore, because it's not fungible like Bitcoin and Ether, it's therefore non-fungible because it's unique. It could be a unique token of one. It could actually be a subset. Maybe it's 10 tokens that are, 10 tokens that are alike, and like that kind of thing. So that's really that's really how we arrived at the word NFT. It's a bit clunky, but of course, after you use it then everybody's just, it's the same, a familiar term. But there could have been a better, there could have been a better term for this. So with that being said, there's many types of NFTs. Like I said, you've got the collectible, I'm going to say the original kind of NFTs, what most people think of, especially from everything that's been in the news, is what I call the digital artwork version. Okay, which is has the collectible value, meaning it's static artwork NFT. Like that's it. And again, the one of the things here, you have verifiability, right? That there's other nuances to it too, but that this digital art is verifiable on the blockchain and so on and so on. So the original ones are just static, like that's it. There's no other component to it. Okay. But now what you have is NFTs can actually have lots of financial components, and actually can be a financial asset. Or maybe there's several financial assets or several financial components to it. And it also may have the collectible, the piece of the asset could be a collectible artwork. Piece of it could be that, piece of it could be a financial asset. And by the way, an NFT can actually be anything. It could be an invoice. It could be a bank letter of credit. It could be anything. And in that case, there's no value other than the informational value of the document and the fact you could verify the document. So anything can really be an NFT, but most people think of it as an artwork simply because that's what's bounced around in the news quite a bit. But the challenge here is you could now perhaps have a bifurcated asset here, where you could have a piece that's collectible, because if it's collectible, the IRS has can broadly define what a collectible is. And if the artwork piece is considered a collectible, it has a different long-term tax rate. So, and then of course, if you have a financial component, it could potentially be a security, because it can entitle you to governance rights, voting rights. It could be entitle you to royalty streams, other revenue streams, other access to other special NFT drops. Like that was the NFT drop that then gives you access to the next NFT in this particular metaverse, and so on like that. So just so quickly on this one, this is a really interesting one here. This is a crypto bond. And if you'll notice on the top left of that certificate, you'll notice that is your Ethereum icon there. Okay. And then on the right side, that's actually wrapped Bitcoin. And so this bond actually has those two assets, ETH and Bitcoin, even though it's wrapped Bitcoin. And then you have a third asset, which is called a sync token. There's actually three assets bonded here. Now, the interesting thing, this one is a 3-year bond. So when it gets to the end of the 3-year period, you can redeem the bond. But guess here's what happens in this case. When you redeem the bond, you burn the artwork. And this is generative artwork, meaning artwork that is algorithmically put together in such a way that what happens is the artwork is then, some is more rare than others and therefore has more value. So it's possible that this artwork could have value. The financial asset component could have value. Could the artwork be worth more than the financial component? So maybe you don't burn it because the artwork's worth more, or you decide you want the financial assets and you burn the bond and the NFT goes away.
Thank you, Kirk. No, I think that's a great example. And I think many people in the audience didn't realize, that this is where the technology is going. So thank you so much for joining us today. Really appreciate it. And I'm sure we're going to have a lot of questions that I'm going to send your way.
Yeah, Amy and Kirk, that was fantastic. And I'll tell you this, there were a lot of questions coming in on non-fungible tokens right before this session. And I know for some of the audience, I mean, we started at 101 on what you need to do, and we got a little advanced here. But there are some of these NFTs are selling for millions, but there's also a lot of other utilities. So Amy, we'll have you back in open forum. And Kirk, that was fantastic. And I'm sure we're going to have you back here on the town hall.
Thank you.
So with that, we're going to, on the tech, one thing I want to highlight, hey, Lisa, is Kirk did such a good job talking about the 3 categories. We actually have a solution for category 1. I mean, this is just a solution. It's like a typical CPA solution, which will support you in supporting your clients with these crypto transactions. In some ways, sometimes the solutions are one of the easiest ways to get your arms around a complex category. So we have an overview on that coming up on the 23rd at 1 p.m. So Lisa, I never thought you'd make PPP and other things look simple, but you can when you talk about crypto, right?
Crypto and K2, K3 make PPP a breeze. Yeah. Let's go through some of these things really quickly. So we have some time for open forum, because I know there are some good questions in there. we wanted to highlight some new tax resources for you. And the first two are available to AICPA members. So there's a nice simple chart of what the tax return due dates are. Might be helpful to share with your clients to, prod them about when they need to be getting you their information. And to that point, if you do believe that your clients are going to need extensions, go ahead and start having the conversations. We know that some clients are hesitant, so the tax section has put together some resources to help you have a conversation with your client. No, an extension isn't going to up your odds for audit. They've given you a sample letter that you can use to get some of the information from your clients to make that extension process a little simpler. Tax section members also have access to an interactive state map that will give you some basic information on each state and territory. So pretty cool stuff there. We'll run through this very quickly because you'll have the numbers in your slides, but basically we're moving along on PPP forgiveness. We're at 85% total. And on the next slide, we've got about 95% of 2020 loans that have been forgiven, 73% of 2021. So still some room. And the forgiveness rates are still coming in really strong. If you look at by dollar amount, they're ranging between 98% and 99%. So really good results there in terms of borrowers using them for their intended purposes. But there was a new procedural notice that came out a couple of weeks ago that covers situations where the lender has granted less than full forgiveness. So in the past, there was an appeal process if the SBA declined to provide full forgiveness, but now they've actually instituted a process if the lender gave less than full forgiveness. We've got a great Journal of Accountancy article that'll run through that for you. But if we just look at the details on the next slide, we've got information on what's basically in the procedural notice. So the borrower can request a review at the SBA level if the lender issued partial forgiveness or the lender required the borrower to apply for less than full forgiveness. So some lenders, had close relationships with the borrowers and they were saying, no, we don't think you should even file for that amount. You should file for something less. So if the borrower made that decision on its own, then the borrower is not eligible to take advantage of this appeal process. Borrowers have 30 calendar days from the date they get the SBA's agreement with the lender, and then they submit their review request. If you had already applied for forgiveness and had gotten less than full amount, then the lender has 30 days from the date of the notice to get you notification that you have this right to appeal. And then you as a borrower have 30 days to appeal. So some very sensitive time issues there. And lenders, frankly, are trying to figure out how to get those notices out for situations where the borrower qualified for less than full. When you go through an appeal process with the SBA, then there are basically three options. The SBA, if we can slip to the next slide, the SBA could come back and say that, yes, borrower, you were right, and you should have gotten more forgiveness. So then they'll pay the lender the difference, and then the lender would have to re-amortize any loan balance that remains. Or the SBA can say, no, lender was right. We agree with their decision. Or the SBA can say, you're both wrong, and we think you get even less than you requested. So in that case, then the lender has to fund back to the SBA, and then the lender comes to the borrower and says, okay, now we have to re-amortize the loan again. So we'll see. I haven't heard of any appeals going through this process yet, but we'll keep you posted as to what we're hearing on how it's actually going.
Yeah, I think that's right, Lisa. I mean, we're connected with the lending community. We'll bring more information to the firms here. And overall, it's amazing. In some ways, it's amazing when you see what percent of loans have been forgiven. But it's going to be a long tail, and there's going to be PPP loans caught up in this process. So we've come to open forum. This was quite a session today. We've got close to 9,000 on the town hall today. One thing people were asking for is a primer on blockchain and crypto. Go to your resources. Hit the resources button. There is a great overview related to blockchain and crypto. We've been holding symposiums for the past many years, and Amy's attended them, Lisa's attended them, and many others of the AICPA, and we bring the best in the country. Kirk's been at them, and we come together and we talk about where blockchain's going, where crypto's going, and you've got the most recent summary report that I think would be a good read for you if you're trying to get a better handle on things. So Lisa, I know you've got some questions that came in that you want to bring to the group here.
Amy, I'm going to throw this one at you, and it goes back to our K2, K3 conversation. One of our, a couple of our attendees brought up a really good question, which is, do FAQs qualify as authoritative guidance from the IRS? And I know you and I talked about that.
FAQs are not authoritative guidance. It's a huge frustration for us. And we've been commenting and telling the IRS and Treasury that they need to put this guidance in notice format so that we can propose our comments and it can be finalized in the regular process. The problem that we do acknowledge is that IRS is very short-staffed, as Mark mentioned earlier, very short on resources. And in the areas of things like crypto, we know that some of those people that were supposed to be working on crypto guidance were the same people working on Emergency CARES Act guidance. So, it's the same people who are expected to push out all of this guidance. So they are short-staffed, but FAQs are not authoritative guidance.
All right, I'm going to throw this one to Kirk and Amy. Are crypto assets subject to FBAR reporting?
Great question. Eric, I just wanted to throw one back to you real quickly on resources. Of course, there's always the AICPA Blockchain Fundamentals course, which is an excellent resource that you guys have had that covers a broad range of 101 type of information. So, regarding the FBAR, we know that we've commented before that the FinCEN, going back from a couple of years, said specifically that crypto assets didn't fit the definition of what would be reported on that. But I think there's also, maybe Amy, if you can comment on that, but other information that may be changing such that, and likely will, it seems to me it would make sense that would be the trajectory that you'd end up having to report on that. So I know in practice over the past couple of years, I know that some people took the conservative approach and reported it, and then some people did not report it. So I've seen both of those happen, at least in previous years.
Well, what I want to do now is we've got a couple of slides here that many of you are going to comment on as we close things out. So let's bring back the slides here. And also, you can follow us all on social media. Amy's active in social media as Lisa and I and Kirk are. So take advantage of that. So, Mark, we're gonna have the National Taxpayer Advocate on next week. That's not next week, in 2 weeks on the town hall.
Yeah, great timing. So we saw her in action today at the Senate Finance Committee hearing. I mentioned right next to our own Jen Lewis from the Tax Executive Committee. She got the job taking over for longtime taxpayer advocate Nina Olson in March of 2000. So, new energy there. It's going to be fascinating. Taxpayer Advocate has the data. So, there's just a lot. She can draw on a lot of internal information, internal data that, for example, we can't get from the outside. We also align on a lot of issues, particularly related to service. And so I think it's going to be a great session, Eric.
Now, thrilled to have her, thrilled that she's going to be joining the town hall community. And I know she's really looking forward to this opportunity to talk to. Maybe we'll have 10,000 people on next week. So Lisa or Amy on this one?
Yeah, I'll cover this quickly. So next week, February 24th at 1 p.m. Eastern, we have our free, for AICPA members, it's 1 CPE free credit, and it is our Washington tax brief. And we'll be covering issues including a legislative outlook, so what is happening on the Hill, and what are AICPA's advocacy efforts on the Hill right now. That will include 3 House reconciliation legislation letters that have been submitted. Also, we're going to cover again IRS advocacy updates regarding IRS services and an update on the e-signature relief, and then R&D guidance and initiatives, Corporate Transparency Act. There's new proposed regs from FinCEN on that, remote worker issues, and then of course ERC updates.
There you go. That'll be a full hour as well, and we've got also the webinar on crypto and that crypto solution. So 2 things to do in your off town hall week. So here are the recent town hall series. Take advantage of them, share them with others. And here's the summary. A lot covered today. Kicking things off about the IRS suspending notices, the great deeper dive into the K2, K3 items, and then going on into crypto, then closing things out related to kind of SBA and updated guidance on PPP loans. So one thing I want to highlight here is that if you're not subscribed to the AICPA Town Hall newsletter, come here. Some of you have opted out of some communications. That's maybe why you're not receiving it. If you go here and opt in, we'll make sure you get the newsletter where we highlight a lot of the resources and topics that we discuss on these town halls. And we also leverage the many questions that come in, and we try to do our best in putting out more information the early in the week following our town halls. So thanks again. This was another Power Hour. The next one's going to be March 3rd, and then we also have one scheduled for March 17th. So hope everyone has a good President's Day weekend, and thanks for being with us today.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.